Hi everyone, welcome back to the Price Action Volume Trader channel. This video we're going to be talking about a basic price action and market structure concepts regarding the candle closes, well, the open, high, low, close of candles. Specifically, we're going to be focusing on the daily time frame candles, which, I mean, if I had to pick just one time frame, I think the daily candlesticks are probably the most important chart to reference. Even if you're just day trading, you can set a bias based on the daily candle, not just from the day before, but also the formation of the current daily candle in order to help you have a good bias and directional trading for the day, granted that you are in line with the higher time frame trend. So here we have three sets of candlesticks, and we're going to be talking about the characteristics of each one. Obviously, red candlesticks are going to be bearish, meaning the open is up here. This is the highest point we achieved, and then we have the lowest point we achieved and the close right here. Same for all three. Bullish candlestick is the opposite. We have a open at the bottom. We had a lowest point for the day in this case, if it's a daily candle, the highest point, and then the close. Now, judging by the shape of the candlesticks, this can also tell us a lot about the strength or decisive direction that the day had. These two are very strong bearish and bullish candles, so these are good indication of a continuation candlestick. So for example here, let me move this up. If we have a market that is in a strong upwards trend, then if we have a pullback here, and then we have a good follow through, then we would expect a strong follow through bullish candle in order to continue our daily momentum. So then in those kinds of days where we have a very strong bullish market, we're going to go over how we can try to use the daily open of the candle to try to see if market does a retracement for the day and then a reversal and reclaims the opening price, and then we could be in line for a strong continuation day. This in the middle, these are more neutral candles, usually candles with smaller bodies and bigger wicks on both sides. So these are candlesticks that don't really give us a lot of directional bias. This is under classical candlestick terminology, this will be like a doji candle, will be the one with a small body and big wicks, for example. Not a lot of indications of the movements. And then we have here what we would call good reversal candles, especially if we're coming up into a high and if we're coming down into a low. So this will be what we would call a bearish pin bar candle or inverted hammer, and this will be a bullish pin bar or a bullish pin bar candle. Okay, so what we're going to go over now is we're going to go into 4 different charts on 4 different markets and just see how studying the overall trend that we have going for that market during the week or during the month, we can start formulating a strategy of trying to position ourselves for a move during the day. We're specifically going to be focusing on more on continuation with trending moves, as we're going to see in the examples following. So let's start with an example here on Bitcoin, which has been on a very strong uptrend. So we can see here we had a very strong move. This was a move happening right after the US elections, which was a very bullish catalyst for crypto. And let's focus on this candle right here. So in this case, we had a strong move up. We had a day where we have a dip back down and then a close back up, giving us a pretty strong close to this daily candle over here, indicating that during the end of the day, buyers really stepped in and bought this up. So what I like to do then is on the next day, we mark off here in blue the opening of this daily candle. And now let's go into an hourly time frame. And we can see each one of these sections is a separate day. So we have the strong move up. This was the day that we have the reversal here. And then we came and closed right over here. So we're in a very strong uptrend. We had a small pullback on this day, and then we closed, with a bullish close, a big buying tail near the bottom. So I like to mark off and always be aware of the opening. This applies to any market that I trade. I'm always very aware of what the opening price for the day is. And then what we start doing, and let's do the replay. We open the day there. This here on the right, this is an indicator that is showing us the formation of the daily candle. This is a free indicator that you can find here. It's called High Time Frame Power of 3. And you can see by 2 degrees. So you can just use this indicator. There's a premium version with more features, but this is a free version and just overlays a candle, and you can change the time frame of the candle, etc. I mostly use it for a daily candle. And so if we hit play here, this is at 3 times the speed. We can see we have a dip here. So already at this point, we've pushed down, we're coming back up, and you can see we are leaving the tail. So now we can start inferring we're on a very strong uptrend. Now I want to see if we reclaim this open price, and you can see also this area in general is very important. We had a lot of resistance yesterday, then support at the end of yesterday, and this morning we fell back down. So now we want to see if we reclaim this to keep going and print a strong bullish candle targeting the previous highs that we have over here. So what we want to see is an open, low, high, and a bullish close, a strong bullish close above the opening price. So if we just keep going play, there you can see that was pretty much the candle. We did dip back down almost exactly to the daily open, but we did close the day bullish above this previous highs here. And if you caught this early on right here, you can see there was a little stall here. We can even go down into like a 15-minute chart. And you can see right here, we dip back down and look at the resistance we're having right at the daily open. And then we have this strong candle here. We can put in the volume indicator as well, just to check. Let's put it in. Let's put a volume indicator. And you can see right here, you can get confirmation that the buying volumes have a big increase here. And then we have a very strong breakout. And then we could have had, a very nice directional move to this previous all-time highs that we had over there. Okay, so that's the first example in Bitcoin. Okay, next example we're gonna see, it's in the SP 500 futures. So in this case, we also have a market that again had a very strong bullish momentum and we made a new all-time high. So we're gonna analyze this candlestick right over here, Friday 8th. If we go into the hourly, you can see right here, let's start the replay right there. That was the day before. Again, this is the Thursday candle, very strong bullish continuation. So now we want to see an open, a dip, and a reclaim of the opening for a possible continuation up. So we can see immediately when we open here on Friday, again, remember we're talking about futures markets. So we know that during the Asia session, volumes are low around 3 a.m. Eastern. When London opens, more liquidity and volumes start coming in. But at 9:30 a.m. when regular market hours opens, that's when we really want to see a directional move. So if we do have the breakout right at New York open or early hours, then that is a good indication that we could be setting up for a strong trending movement for the day. So let's hit play. And then you can see right there, we had a very strong bullish candle, and look at the time, 9 a.m. So this is the New York open candlestick right over here. So if you go into the 5-minute, you can see we spent most of Asia in a range. London open at 3 a.m. We continued chopping, and then right here around 5 a.m. Eastern time we dip down, and then we start coming up. Then we start chopping again right at the highs of extended trading hours and the open. But then right here, right on this candle, this is the New York open. We spent 15 minutes trying to push through, and then right here at 9:45 we have the push off, retrace, and continuation. And then this gives us a very nice trending movement up until the pretty much almost the last hour of the trading day over here. Okay, so going back there, you can see again how we had our open. Then we printed a low point here on this. Then we broke the open area range resistance, and this was also the high from the day before. Strong close through on the 9 a.m. New York open candle, and then we have our high and the bullish close for the continuation candle. Let's go into gold to look at a bearish example. So if we zoom out, you can see that pretty much for the last week and a half, we've been in a downtrend overall in the gold market. So if we are in a downtrend, what we want to see is price opening, making a wick high, and then a continuation body and a low close near the bottoms. And if we go and start our replay, so right here, this was the close from this day, from Tuesday, closing right near the bottoms. We had this strong bearish candle. And now let's start playing. So we open up on Tuesday into Wednesday. So right now you can see we have the open and we're making highs here. Now at this point we see we made the wick high and we had a strong close. So now we expect a continuation. Oh, I had to stop it earlier. Right there. Okay, so that was the close of the day. And if we go into a 5-minute chart, and this is the futures market that we are looking at. So you can see just a very weak opening in Asia. Then we pick up a little bit once the main markets in Hong Kong, Tokyo open. And then right here around 9 a.m. at New York open, immediately we open literally right here and just immediately start dumping on New York. So now we know that if we have a strong break below the daily open, we have printed the upper rejection wick, and now we can look for again a continuation to the downside. And obviously, you know, we got to take into account higher time frame targets, etc. I'm not going to put volume profile and everything for now, but if we zoom out, you can see that we had a very clear swing low, which we haven't hit yet on this day, but this is definitely a strong magnet for price if we have a continuation day down. Okay, and let's finish off with one last example in Forex, the Australian dollar, US dollar. Which you can see we had a very bearish day here on Friday, November 8th. So let's take the replay button. This was the daily candle that we closed in on this day. We've been having a strong, very strong downtrend. We did have this push up, which managed to close above this previous swing high, but then we had a very strong push down over here. And if we press play, we're opening the next day. So what are we looking for? We're looking for a push above the daily open to make a high here, and then if we come and have a strong push below the daily open, then we'll look for that continuation. You know, just looking back here, first obvious target we have is going to be this swing low over here. So if we push play, again, this is the hourly. You can see we close below. Now, it doesn't mean it's not always going to be, you know, perfectly. Sometimes you're going to get some chop around this area. This is not a, you know, 100% hit strategy that if you just go above and then below is going to immediately push lower, etc. But we're going with the general directional bias and the higher time frame trend. So if we keep pushing play, okay, so in this case we've already closed this daily candle. So you can see this day on Monday, it was not a very strong day. Then we can move this to the open of the next day. And here you can actually see that literally within the first 3 hours we pushed up, and then we started immediately pushing down below the daily open. And then right there you can see we tapped the low here to the tick, or no, you just missed it by a little bit, but then it's most likely gonna come right there. So yeah, that was the move. You can see it actually took 3 days to hit this target, but as you can see, every single day we had the open, a little push up, and then a strong push down. Here we had the open, a little bit of a push up, making up the wick, and then the continuation down. Okay, so that's pretty much it for the video. This is a general guide how you can use the open, high, low, close of daily candles and the opening price for the day in order to form a bias to help you in making directional plays, especially when you are in either a bullish or a bearish trending market where you are looking for a unidirectional continuation. Okay, that's pretty much it for the video. Hope you've all been having a great week. Make sure to subscribe, hit the thumbs up, and I will see you all in the next one. Take care.